Hello everyone. What's happening in US market now? The similar was happened on 1987 October month, which was famously called as Black Monday. So in this video, let's discuss about its similarity along with the regular pre-market report for today, 7th April 2025 for the Indian stock market in terms of Nifty and Bank Nifty. Following the Wednesday Trump tariff, Thursday US market crashed. On an average, all three major index was down about 5%. Then after that, three events followed by it which triggered the further sell-off. One, on Friday, China as a retaliation announced 34% tariff on all import goods to China from US. Though US having a huge trade deficit with China, still China is the third largest export destination for US, especially for the agriculture related products. So this China tariff do affect the US economy. Now, because of this Trump tariff and the possible retaliation by many other countries, as per JP Morgan Chase, now it expects to increase the chance of recession in 2025 to 60% from earlier 40%. A week and 2 weeks ago, when JP Morgan increased the recession probability to above 40% and 35% from earlier 15% before Trump presidency, market did reacted negative. Now that recession probability increased all the way to 60%, so much more probability of recession. This is the second negative. Third, in an event press conference, Fed Chairman Powell gave the warning that larger than expected tariff will likely increase the inflation and will also slow the economy. Above all, lot of investment companies cut shorter the S&P 500 target to around 4,200 to 4,800 range. So last Friday, all these made the US market to have another disastrous session. Dow Jones crashed 5.5%, S&P 500 crashed 5.97% and Nasdaq also crashed 5.82%. So VIX shot up 50% and moved about to 45. If required, please pause and have a look. Last US VIX increased above 40 was 1 in 2008 during global financial crisis and 2 during the pandemic. So at present, there is an enormous fear in the market, especially about today's US market opening, which will be similar to 1987 Black Monday type of event. Just a bit of background, between 1982 to 1987, US market had a very good run, which obviously created a good time, and by many metric at that time, Dow Jones and S&P 500 was considered as overvalued. And also at that time, US was having a huge trade deficit with Germany. So US wants to reduce the US dollar strength and wants Germany to keep the interest rate low as per Plaza Accord agreement. But in violation to that agreement, on Wednesday, October 14, 1987, Germany raised the interest rate, which started the sell-off. Then Thursday, larger than expected trade deficit was released by US government. So Thursday and Friday, US major index had a severe panic sell-off, which is exactly similar to now, Wednesday Trump tariff, then followed by Thursday and Friday US market sell-off. After that, during weekend, then that time 1987 US Treasury Secretary gave an interview criticizing Germany's central bank and warned about dollar devaluation. So during weekend, which created the currency war panic, hence the following Monday, October 19th, both Dow Jones and S&P 500 crashed over 20% each. Here, one of the main reasons for this level of sell-off in October 1987 was then that time algo trading, which multiplied the human panic. Now, in the present time, instead of currency war, it's trade war. And similar to that US Treasury Secretary speech, Trump in his Truth social media post mentioned that this is an economic revolution and we will win, hang on though, like so on. Basically, it seems US President is not going to back off from the tariff, and the first 10% tariff on all the import goods into US started from last Saturday night. So it's very much similar to 1987, sudden loss of investors' confidence and more importantly sudden economic shock, which all fuels the today's Monday trading as potential another Black Monday. Compared to 1987, we got now the circuit breaker. For example, if S&P 500 drops above 7%, then that will halt the trading for some time. If I'm correct, it's 15 minutes. And with respect to that panic, already for the third session in a row, US future market is crashing. At the time of this video, Dow Jones is down around 4%, S&P 500 is down 4.5%, again Nasdaq is the major dragger, trading negative 5%. Hence, it's only a matter of time if either Japan or European Union pushed any tariff retaliation, then we might have another Black Monday. So let's hope not to have similar price action. Anyway, in 1987, after the Monday crash, then the Fed chairman assured that he will provide all the necessary liquidity to support the market, which in turn stabilized the market, and then market took 2 years, 1989, to recover those losses. In our case, it's all in Trump's hand. If he backed off from its reciprocal tariff, then market might stabilize, or else we can expect it to fall further. Then coming to GIFT Nifty, as a response to the Friday US market negative closing, on Saturday morning already GIFT Nifty was down and traded at 23,343, indicating the gap down opening of 600 points. Now in that, the present US future market third session sell-off is not factored, so there is a potential for much more worse gap down opening, like over 650 to 700 points. I sincerely hope I'm wrong. Anyway, no point in seeing or discussing any other things. However, just like to highlight some news. It appears India is not going to pause retaliation tariff on US, but as per Reuters.com, based on some government sources, the trade talk between US and India is attaining some progress, which is good if market believes. Then second, RBI expects to start its monetary policy meeting today for the industry decision, which they are going to report on coming Wednesday. For now, analysts expecting a 25 basis point rate cut, which is positive but not sure is it enough to overcome Trump tariff negativity. Only time has to say. One more thing, not just the stock market, all the commodity market also crashing. At the time of this video, WTI crude crashed further 3.5% on top of the Friday down 7%. So now it's trading below $60 per barrel. And Brent crude oil is trading around $63.5 per barrel. However, gold haven't fallen much, trading $3,026 per ounce. About the things to look out, please keep an eye out on the European side, since any form of retaliation tariff on US export to Europe will multiply the negativity. In the afternoon, Germany's industrial production growth data, and in night for US, consumer inflation expectation value and some FOMC member speech are some of the important things we need to keep an eye out today. Coming to technical, last Friday Nifty opened 60 points gap down at 23,190 and was under pressure throughout the session. Then it closed at around 22,900. Thus on the daily chart, Nifty formed a long bearish candlestick pattern with lower high formation for the fourth consecutive session. In addition, it fell below the midline of the Bollinger Band and also below the 50% Fibonacci retracement, which is negative. Furthermore, RSI momentum indicator also signaled a weak trend, dropping below the 50 mark to 45.93, and MACD on the verge of a negative crossover. Hence, the next crucial support is at 22,300 to 22,000 zone. If broken, we could see a move towards 22,000, which will be a psychological support. Hope it won't break. However, in case of a bounce back, 23,000 is likely to be an immediate hurdle. In case of Bank Nifty, it opened more than 100 points gap up and again outperformed Nifty, then closed at above 15,500. Thus on the daily chart, Bank Nifty formed a bearish candlestick pattern with both upper and lower shadow, indicating volatility. In addition, it could not sustain the trendline breakout, and also RSI tilted downward but still held above the 60 mark, 64.31, and MACD remained well above the zero line. However, on the positive side, Bank Nifty still traded well above all key moving averages, with all short to medium exponential moving average trending upward. Hence, the strong support is at 50,000 to 50,800 zone, and a breach below this range could trigger further downside towards 49,000. On the upside, resistance is at 15,750, and a breakout above this level could drive the Bank Nifty towards 52,050. As per the weekly options data, the maximum call option open test was at 23,200 strike, followed by 23,000 and 23,500, with the maximum new call option rating at 23,000 strike, and then 23,200 and 23,100. On the put side, the maximum open test was at 22,500 strike, followed by 22,000 and 22,800, with maximum new put option rating at 22,000 strike, and then 22,500 and 22,900. Thus, from options data, Nifty's trading range might be between 22,000 to 23,200 zone in the near term, as breaking this range on either side could give a firm direction. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so that it will help me with the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.